please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Those are the micros that we are watching out for. Back to macros, and this one is an exclusive CNBC TV18 exclusive. Veteran banker Uday Kotak has warned that a weak rupee is only a short-term fix to improve export competitiveness. In a chat with our colleague Ritu Singh on the sidelines of the USIBC India Idea Summit, Uday Kotak added that persistent weakness in the currency could push current account deficit past the red line of 3%.
It's about competitiveness. I think the rupee was on a REER basis a little overvalued, therefore this correction is fine. In India, normally the rupee moves like a staircase, it never works like a slope, and therefore this is a staircase which has happened over the last few months. And there are two ways of getting competitiveness. One is a short-term way of getting competitiveness of our exports, which is improving the currency, that is depreciating the currency. Longer term improvement of competitiveness is through productivity, and that is where I think India needs a lot more work. This short term fix through currency only lasts for a short while. Ultimately, it is the efficiency of the economy which is important. And what worries me on our import side is the second largest item of import is now electronics. And as India consumes a lot more, this flood of imports into India without domestic capacity to manufacture some of this is the key reason why the current account is under pressure.
But you think rupee, if it falls further from here, will it be net good for India as a exporting country, or do you think we haven't arrived at a fair value yet?
See, finally it's about the current account deficit.
Yes.
For the year ended March 2018, we were sub 2%. We were 1.9% of GDP. If you go back to 2013, we were at 4.4, 4.5%. That was a red line. As I mentioned, I believe the amber line for India is a current account deficit not exceeding 3%. And we run the risk of being pretty close to it in 2018-19.
Also wanted to get your sense on the macros. 8.2% GDP numbers. It's great. With 2 consecutive quarters of growth that we've seen. But would you say, to some extent, a lot of this growth is driven by government spending? A lot of this growth is also jobless growth. Does that concern you?
I'm seeing a significant growth in micro demand, and Indian business and industry is feeling good after a long time. Therefore, on the ground, we are seeing a pickup across different sectors. I hope and believe that this sustains, and the key to sustainability of our growth is now much more macro factors which can impact us. And recently I was talking to a few businesses. They're all beginning to add jobs as well. I know for a fact we at the bank are going to add about more than 10% to our jobs this year.
That's very good to hear, but are corporates also looking at greenfield projects? Is credit demand, do you think,
investment demand is beginning to start, and it is here that we have to be able to modulate the macro challenges. Therefore, the challenges which can come are coming out of interest rates and the rupee. Therefore, just as Indian corporate sector is beginning to get some of its animal spirits back, we need to have a macro which is more stable, and this is where policymakers' role will be critical.
Since you mentioned policymakers, my last question to you, with the rupee rising, with the crude oil prices rising, do you think we're set for a third consecutive quarter of rate hike from the Reserve Bank of India?
It's always difficult to venture, but I do believe between now and March 2019, we would see a 50 basis points further rate hike in this period.